Isn't that fascinating? Keeta, or the KTA token, continues to outperform. It's climbing from one high to the next, yet nobody seems to be interested. The attention on the token is still comparatively low. Now, is this a potential opportunity to still jump on the bandwagon? Let's have a look at the on-chain data, the data most people are not considering. Now, this is not the first video on Keeta on this channel. The very first one was published 78 days ago. And that video underperformed the average video, which is here in gray, by quite a bit. Another video followed. Again, it tended to perform rather poorly. And the last video was yet another underperformer. So it appears as if nobody cares about the token, yet the price continues to go up. The first video, by the way, was published when the price was still at 15 cents. Now we are at $1.10. So the first video was published somewhere around here. And so I always try to talk about tokens when they're still relatively small, when they still have some upside potential. Now feel free to subscribe because I publish videos on this channel regularly. We've already talked about the fundamentals in a prior video, how Keeta is riding the real world asset narrative. And with all of that positive momentum, it's now the fourth largest trending token on the base chain with liquidity of 16.6 million. In the last 24 hours, we saw 1,200 wallets interacting with the token. The vast majority of those wallets were buyers. So it's 910 buyers versus only 486 sellers. The price didn't appreciate that much though in the last 24 hours. So the sellers tended to move more dollars on average than the buyers did, which is kind of normal when we are in an upwards trend like this. In total, we've got almost 90,000 holders on chain. We're going to look at the on-chain data in a second. The reason why the on-chain data is so useful is because we don't yet have significant trading volume on the perpetual futures market. So there's no manipulation with short-term leverage yet. Until today, we see most trading volume happening directly on chain, on the Aerodrome decentralized exchange and on the Uniswap decentralized exchange. And this is where potentially future upside potential could be, because more listings by centralized exchanges will of course push up the price further. And so here is, I believe, is the most important data. This is the number of retail investors versus the number of whale investors over time. In the middle is something in between. So to be counted as a retail wallet that matters, the wallet has to hold at least 1,000 KTA tokens. Now at the current price, that's a bit over $1,000. And so we're already filtering out the majority of holders, right? We go from 89,500 to only 5,000 wallets. The vast majority has only dust. The vast majority doesn't own that much KTA. In the middle, we've got medium-sized retail. So that's now 10,000 tokens. There are 2,100 such wallets. And on the right, we've got 100,000 tokens. There are only 553 such wallets. Now, what I find fascinating is how much this retail wallet holder graph mirrors the logarithmic price chart. So it seems like the whales aren't really driving the price. It seems like as there are more retail investors that get into the token, the price appreciates. This seems to not be a whale-driven rally, but the whales are also not dumping. The central question is, how much longer will the retail investors buy? Because if they buy for long enough, then of course the centralized exchanges will list the token. The problem is when they stop buying, then the price is very quickly going to collapse, because unfortunately Keeta is an inflationary token. There is going to be more supply in the future. And when the supply grows faster than the demand, then we've got a problem, right? Then we've got an asset that underperforms Bitcoin and Ethereum. But right now, momentum is still very, very bullish. People are taking profit, but not yet fast enough to kill the rally. The market cap is still less than $500 million. And there are several tokens in the real world asset space that are above 1 billion. So another 2 or 3x is definitely possible for Keeta. But again, it all hinges on the growth of the number of retail investors. Just buying the token now and keeping it on the sidelines for the next few years is probably a bad idea. This is a momentum play. Now, fundamentally, the problem is that returns are very much concentrated in a few assets. Most assets tend to go down, and there are a few altcoins that make the multiple X returns. And the problem is those assets change change over time. What worked well yesterday might not work tomorrow. And so it's always a game against the odds. And so we can't really deploy a lot of capital in those trades. If the likelihood of losing is very high, it means we can't deploy too much in the position. It also means we can't necessarily diversify, because if we now own 10 or 20 tokens, most of those tokens are losing. And if then the few outliers make up for all the losses is a completely different question. It's very unclear. Now there is a way to make money a bit more consistently, and that's actually trading the larger tokens. The issue with the larger tokens though is that they move very much in tandem with the overall market. As in, when Bitcoin goes up, then Solana tends to go up as well, Ethereum tends to go up as well. But there are movements within crypto where sometimes a particular asset class is more preferred than another one. And we can play on that relative valuation. We can play on attention moving from A to B within crypto without having to try to find the few winners. For example, have a look at this. This is the Solana dominance. So how much of all of crypto is currently in SOL? And there seems to be somewhat of an invisible ceiling between 3 to 4%. This is where Solana historically had been very expensive. Or have a look at this. This is the Ethereum dominance. It tends to be very cheap when only 7% of all of cryptocurrencies market cap is in ETH. It tends to be expensive when it's around 20 or 21%. And so we can benefit from this independent of where the US dollar valuations go. So if Bitcoin is going up or down does not interest us. The only thing that interests us is whether or not Ethereum will perform better than Solana or Solana will perform better than Ethereum, just relatively speaking. So I saw that set up when Ethereum was extremely cheap in the middle of April. We got very close to the historical low that was formed in September of 2019. And so have a look at this. This is Solana relative to Ethereum. And when ETH hit that low point, I shorted Solana relative to ETH. So I was not interested at all in the Solana US dollar price or in the Ethereum US dollar price. I was only interested in the relative valuation. I saw we are high on the trading range and I bet on that range coming down. So here's that post. It's from April 13th. I'm opening a relative valuation short of SOL to Ethereum using Venus Finance. More information will be provided in a few hours in today's premium update video. So I publish premium updates every 3 to 4 days. And then on May 20th, I closed the position. And of course, other members made money with this as well. But I want to share something here. This is when the position was opened. Here is when the position was closed. And I want you to look at the Solana value. Again, we bet on Solana doing worse than Ethereum. Solana itself actually went up during the time. It appreciated by 25%. But Ethereum appreciated more than that. It went up by more than 50%. And so we completely canceled out the macro. We are not interested at all whether or not everything is going up or down on a given day. We made money just on the relative valuation. So within those few weeks, we went from 43K to almost 60K. Yes, I know these kind of strategies might seem a bit complex, and why don't we just buy an altcoin and make it 10x? But again, it's all about risk-adjusted returns. If we want to bet significant capital, tens of thousands of dollars, or let's say relative to your net worth, high percentages. If we don't just want to play with play money, but we actually want to make real gains, we need to use strategies that don't have an 80 or 90% chance of failure. I see people making these mistakes all the time. I even see people making mistakes with their risk off position. So let's say they don't want to be exposed to crypto. They just want to be in stable coins. Let those stable coins just stay laying in the wallet. But there are opportunities to make very nice constant returns even with stable coins. So this is 16% APR. This can be achieved on Hyperliquid without a single trade. This is all just automated arbitrage by the market maker. But of course, I've also got my risk on part of the portfolio. And here's something other people don't show. Most people just show individual trades and say, hey, this is how we always make money. Very few people are actually willing to share their overall portfolio performance. Now, I started trading on Hyperliquid on April 22nd, and here is my P&L over time. And since I'm sharing all of my trades, the members can just copy me. And this is actually very nice feedback. The same kind of portfolio development chart. This chart tells a story, first trying it without any support, and then afterwards, where this green arrow is shown, exclusively following Gerhard's trade and slowly digging out of the hole. If you've got the right risk management in place, there's actually a lot of money to be made. in this market still. But actually, I don't want that everybody is just copy trading me. The community is about elevating our skills. It's about learning as much as possible, helping each other, finding market opportunities, and then of course capitalizing on those opportunities. So I've actually made more than 100 tutorial videos just on various topics within crypto, risk management, portfolio valuation, blockchain analysis. Feel free to binge watch this. It's actually nice to get those DMs. Hey Gerhard, I just wanted to thanks a lot for everything you've done. Since I've only been listening to you, I've been consistently profitable now. I just entered your, I've blacked this out, XYZ position as well. Or here, this is also another nice message. I'm not going to read through all of this. Feel free to stop the video. But yeah, if you want to join us, if you want to copy trade me, if you want to learn more about crypto, feel free to check it out. It's currently $125 per month. The price has actually been lowered because now the attention on crypto is much lower than it used to be a few months back. Once the masses come back in again, then the price will be back to 165. So if you're signing up today, you will never pay a higher price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.